Why is the market down today? Today I'm going to go over 3 different reasons why. And this isn't important just because you're an investor. This is an important message for anybody that is involved in the economy whatsoever, which means it's important for you. So the first reason that the market is down today is fear of inflation. Now this is something I just went over in my previous video, so if you haven't checked that out, definitely check that out. But inflation is here, and here's kind of proof. Companies are paying higher and higher prices just for the raw goods. And anytime that a raw good is going to cost more, it's going to cost more for the final product. So that cost is going to be passed on to you as a consumer. So you're going to be expected to pay a higher price to pay for the higher cost of raw materials. To combat this, the feds might have to increase their interest rates, which they weren't planning on doing anytime soon. But they might have to do this right now to combat against, general inflation. What this is going to do, however, is going to decrease future cash flows of these companies, making them less attractive to buy. This is only going to happen if inflation is truly here, but as I mentioned, it is here. So crude oil is an example. So crude oil last year was selling at $21 in April of 2020. Now it's selling for $63. So that's a 300% increase in just a year's time for crude oil. Lumber is another impressive metric that has really increased. So if you look at this visual here from visualcapitalist.com, you can see that the price of lumber has skyrocketed 377%. Now, what this is showing is it's showing how far $50,000 in lumber would go in May of 2020 versus May of 2021. So in May of 2020, this would be enough to build just over 10 single family homes that are around 2,300 square feet. This is the average size of an American home. In 2020, this is just enough lumber to go and build just over 2 single family homes. So you can see that this is a massive difference in the price of lumber and how far your money is going to be going. Another example that you're going to be impacted by is the price of the grocery. You may not have noticed yet, but you will notice if this goes any further. So an example, the cost of pork has gone up 10% over the past year. The price of chicken has gone up 11%. The price of eggs and cheese has gone up about 6.5%. So if you haven't noticed this yet, you definitely will. So you need to be smart about what you're purchasing, how much you're purchasing, and it might be time to buy a deep freezer so that you can stock up on some of these essential items. You don't want to go out and buy absolutely everything up, or else this is going to exacerbate the problem. But you definitely want to have, some combat against inflation for you and your family. The second reason that the market is down today is that we're seeing a dip in all types of stocks. So this isn't just in one metric area. It's not just tech stocks, for example. So we're seeing it across the board that different stocks are going down. So as prices are going down, people have less purchasing power. So with inflation, you don't have as much money to spend on goods and services, and you definitely don't have as much money to spend in an investment pool. So that's why a lot of everything is impacted by the price of inflation. Another example here is that the vast majority of stores have taken a hit, especially in retail, not just groceries. So many retailers have pulled back. They've furloughed workers, they've fired people, they've shut down stores, they've decreased their footprint, all of this. Except for one store in particular, and that is Dollar General. Why? Because their goods are cheap. So people are finding that they have less and less money or less and less purchasing power. And the demand for Dollar General has skyrocketed. Just in the next year, in this current year, Dollar General plans to open another 1,000 locations. They're currently in 39 states and they're going to be branching out. So if you haven't been to Dollar General or you're not familiar with them, you're going to start to see them popping up everywhere. The reason is because the demand's there. People have less money, they're looking for cheaper alternatives, and Dollar General is providing that alternative that people are looking for. If inflation continues to rise, Dollar General is going to try to combat this with their lower prices. So be on the lookout for Dollar General. It might be a good investment for you to make if you're not just going to be shopping at a Dollar General. It might be a good company to look at their books, look at their balance sheets. I have not personally, but it might be a good company to look at investing in. The third reason that the market is down is that investors are nervous. So we have been living in a period of extreme bullishness. So except for 2020, the early part of 2020, our economy has just been going up and up and up and up and up. If you're looking at the Dow or the S&P or specific stocks. So, I mean, you could just throw on a dartboard and land on any stock within the past 5 years and you would have probably made money as long as they made it through the early part of 2020. Everything has just been constantly going up. For example, just the past 5 years, the S&P is up 103%. In the past 5 years, all you had to do was bet on the index fund. You didn't have to be precise or anything. You didn't have to pick out certain stocks. You didn't have to have a really in-depth portfolio. If you had just purchased anything, just a share of the S&P 500, it was up 103%. Yes, it did drop 32% in early 2020, which, March and April. But since then, it is up and rebounded about 50% in just 1 year. So the S&P has looked really good, and it's looked really good for a long time. And true investors know that you can't live in a bull market forever. They know that a correction will be coming. There's always been a bear market soon after a long period of bull, and this has been a long period of bull market. So the correction might be here. Is this a sign that just because today it's down quite a bit today, but is this the sign that this is going to be starting the correction, and what can we do to make it through this? So this is a very volatile time that we're all living through. Things are starting to open up more. People are getting more comfortable going out. Stores are opening up. And states are opening up. States that haven't been doing anything for a year. California, example. And you're starting to see more fans at a ball game. You're starting to see more regulations decreasing around masks. So people are becoming more and more comfortable, and they're getting out and spending more money. However, do they have the money to spend? It's a weird time to see us start to rebound because, you've been told for so long that you can't go out, you can't spend your money, this business has to shut down. Now everything's starting to open back up, and people have been getting money from the government, and some people didn't even lose their jobs. They're still getting government money. So there's a lot of money out there, but people are kind of nervous because of inflation. So you're seeing your costs go up and up and up. So we're wondering, when all of this is going to kind of stop? Is this period of inflation, is it just a short-lived period of inflation? Is this just going to be, possibly through the middle of the summer? Or is this going to be a longer period of inflation where we're really going to be hurting? Because inflation, to be honest, will hurt everybody. Any type of resource that you have that's liquid right now will just be worth less and less and less. So any cash that you might have, any type of savings that you might have is going to decrease in value. So we're really hoping that inflation does not turn into hyperinflation where the value of everything is going to skyrocket and your savings are going to drastically decrease. The best thing that you can do now is to make sure that you are keeping up with your portfolio. Are you investing properly in bonds? Are you investing properly in different stocks? Are you, not putting all of your eggs in one basket? Are you looking into things like crypto, which might be an investment that you want to put like 5% into, something around those lines? You don't want to just group all of your investments into something and not protect yourself. Because if we do go through a bad economy, you would end up losing everything. So you want to make sure that you are, diversified as much as you possibly can. Always look out for the loss factor. Another thing that you can do is make sure that any type of goods that you're going to be using, that you're stocked up on. You don't want to be hoarding everything like I mentioned before, because that will exacerbate the issue. You want to help everybody. All you want to do is buy the amount of toilet paper that you need, buy the amount of chicken that you need, buy the amount of cheese that you need, and just keep that stock plenished. So you don't want to go out and buy up everything and try to profit off this, because it's just going to make everything so much worse. So it's not going to help anybody out. So look out for yourself, look out for your neighbor, and definitely look out for your family. I hope that you have enjoyed this video, and if you did, hit subscribe button, and I hope to see you in the next video.